Traders grow less confident in a December rate cut from the Fed. Welcome to Market Insights, I'm Peter Devlin. The Federal Reserve is getting cagier about the extent of further policy easing, faced with stubborn inflation and fiscal policy uncertainty. Traders pared back their expectations for a cut in December after Fed Chair Jerome Powell said that the US Central Bank does not need to rush to lower interest rates. So, should we expect a potentially more cautious approach to easing? Well, to help answer that and dive into the latest data, I'm joined by James Knightley, Chief International Economist at ING. Welcome, James. Thank you very much for joining us. So let's start with the data today. And US retail sales advanced in October, boosted by a jump in auto purchases. Do you think that the strong spending momentum will continue as we head into the holiday season?
Well, it looks as though the US economy is in a pretty good position right now. We've got clarity in the wake of the US election. Unemployment is low and asset prices keep rising. And of course, on top of that, gasoline prices have been falling away. So that gives people a little bit more cash in their pocket to go out and spend on other things. So for now, it certainly does look as though that strong consumer is going to remain a key theme through the rest of this year. The key story is what happens for next year.
So meanwhile, more data and industrial production declined in October, held back by strikes and storms. Will we see a similar picture in the flash manufacturing PMIs next week?
Yeah, again, it's an interesting one. The Boeing strike has obviously weighed pretty heavily. And that disruption from the hurricanes, it's always impacted people's ability to get to work. So it's understandable that we had a soft data print today. But the early gauges for manufacturing sentiments in this sort of new Trump era are looking pretty good. We had the New York Fed survey today, very, very strong, big jump. Is that just a reflection that manufacturers are pretty happy with this low tax environment Donald Trump has promised us? Or is there this interesting view that actually tariffs may be good for the US economy? I've got my doubts, but it was an unusual jump, shall we say. So we're looking to see if that's replicated in the other regional surveys next week. If it is, then that's another strong data point pointing to, decent US economic activity. And that, again, is going to make the Fed more cautious in terms of its pace of rate cutting.
Some more cautious comments as well from Boston Fed President Susan Collins today, saying a December rate cut isn't a done deal. As well, traders now pricing in a roughly 50% chance of a quarter-point cut next month. So what are you expecting for Christmas?
Yeah, I think it's all going to come down to that jobs report we're going to get on December the 6th. We do have another set of inflation numbers just ahead of the December Fed Reserve decision as well. So it is, really much on a knife edge. I mean, it's a 50-50 call right now in terms of market pricing. And as I say, if we get a jobs number, say, below 100,000 again next month, I think that could be a point that the Fed will just say, OK, one more, and then we'll consider a pause in January. But certainly, I think it is going to be more of a gradual lowering of the Fed funds rate over the next few months and quarters.
So finally, James, let's turn to the political uncertainty. You did say in your notes that Donald Trump's victory means fewer rate cuts from the Fed. So what's your outlook for next year, and should markets adjust to a more hawkish future?
Yeah, well, I think ahead of the election, a lot of us were nervous that it may not be a clean, clear result. And it was very, very clear results. And so that provides a lot of clarity. And so I think a lot of companies that may have been sat on the sidelines, a little bit cautious about investment, a little bit cautious on hiring, maybe starting to think, well, we could start putting money to work. And also in a low tax environment, that may also embolden companies to do a little bit more. But on top of that, not only have we got perhaps this slightly stronger near-term growth story coming through, we've got the lingering fear of what do tariffs mean and how are they going to impact inflation. So if you've got stronger near-term growth and medium to longer-term inflation fears are picking up, it just argues for me for the Fed to be somewhat more cautious than previously thought. So, for example, before the election, the market was pricing about 125 basis points of cuts between now and the end of next year. Now we're down to just 75 basis points of cuts. And I think sort of 75 to 100 is where I'm thinking right now as well.
James Knightley of ING. Thank you very much for your thoughts. And that's Market Insights. Don't forget, you can watch more videos on Reuters.com.